Listening to Donald Trump explain economic policy is a lot like watching a man try to explain quantum physics while simultaneously juggling chainsaws and complaining about the water pressure in his shower. One minute we are talking about the gold standard. The next we are talking about sharks, then batteries, then Hannibal Lecter. And suddenly we have arrived at a concept of a plan to fix the entire U.S. economy. It is a wild ride. It is entertaining. It is certainly never boring. But when the rally lights turn off and the red hats go back in the closet, we are left with a very serious question that has nothing to do with sharks or fictional serial killers. We are left with the math, and unfortunately for all of us, the math does not care about political slogans. The former president has been throwing around some incredibly shiny objects lately. He is promising a golden age. He is promising to liberate you from the tyranny of high prices. He has even floated the idea of capping credit card interest rates at 10%. Now, on the surface, that sounds fantastic. Who wouldn't want that? You look at your statement, you see 28% interest, and you think, yes, absolutely. Cut that in half. It is the ultimate populist candy. It tastes sweet. It makes you feel good. It makes you want to vote for the guy who promises to stick it to the big bad banks. But we have to be adults here. We have to look at the nutritional label on that candy. Because when you actually strip away the rhetoric and look at the economic reality of what a second Trump term might look like, you start to realize that the cure might actually be more painful than the disease. Let's start with this 10% credit card cap, because it is the perfect example of how a soundbite collapses under the weight of reality. The median credit card interest rate right now is hovering near record highs. People are drowning. So Trump says, let's cap it. But here's what the banks, the villains in this story, will tell you if you get them off the record. They don't charge 25 or 30% just because they are greedy, though they certainly are that. They charge it because unsecured debt is risky. If you force them to lend at 10%, they simply won't lend to anyone who isn't already rich. It is the law of unintended consequences. You try to help the working class guy fix his car by capping the rate, and instead the bank cuts up his card. Now he goes to a payday lender and pays 300%. The road to economic hell is paved with populist intentions. But the credit card cap is just a side dish. The main course of the Trump economic agenda, the thing that should actually keep you up at night, is his obsession with tariffs. Trump loves tariffs. He loves them like he loves gold-plated furniture. He views them as a magic wand that will bring factories back to Ohio and Pennsylvania. He has proposed a 10% universal tariff on every single thing that enters the United States. Bananas from Costa Rica, 10%. Wine from France, 10%. Electronics from Japan, 10%. And for China, he is talking about 60% or higher. Now, he will stand on a stage and tell you that China pays the tariff. He will tell you that foreign countries write a check to the U.S. Treasury. That is a lie. That is not how tariffs work. It has never been how tariffs work. When a shipping container arrives at the Port of Long Beach, the U.S. government charges the importer, the American company, the tax. So Walmart pays the tax, Target pays the tax, Ford pays the tax. And do you think Walmart is going to just eat that cost out of the goodness of their hearts? Do you think they are going to lower their profit margins to protect your wallet? Of course not. They are going to pass that cost directly to you. They will raise the price of the t-shirt, the toaster, the avocado, and the iPhone. A tariff is a sales tax on the American consumer. It is that simple. The Peterson Institute for International Economics ran the numbers. They didn't use concepts of math. They used actual math. They estimated that Trump's proposed tariffs would cost the average middle-income household about $2,600 a year. That is $1,700 more than the average tax cut they might get from extending the 2017 tax cuts. Think about that trade. He puts $100 in your front pocket with a tax cut, and he takes $200 out of your back pocket with higher prices at the store. You are not winning that trade. You are losing purchasing power, and this brings us to the dreaded I word, inflation. We have spent the last 3 years fighting a brutal war against inflation. We finally, painfully, started to see it cool down. But Trump's policies are inflationary rocket fuel. You cannot slap a 10% tax on $3 trillion worth of imports and expect prices to stay down. It is impossible. But it is not just the goods. It is the labor Trump has promised the largest domestic deportation operation in American history. Now, put aside your feelings on immigration for a moment. Put aside the social arguments, the cultural arguments, the legal arguments. Look at this strictly as a cold-hearted economist. There are millions of undocumented workers in this country. They harvest the food in California. They build the houses in Texas. They clean the hotels in Nevada. If you remove millions of workers from the labor force overnight, you create a massive supply shock. Construction companies will not be able to find workers. Farms will not be able to pick crops. What happens when labor is scarce? Wages go up. That sounds good for the worker, right? But if a farmer has to pay double for labor, the price of milk doubles. If a home builder has to pay double for drywallers, the price of a new home skyrockets. When you combine a labor shortage with a massive tariff on imported goods, you are creating a perfect storm for stagflation. You get the high prices, but you don't get the economic growth because businesses are paralyzed by higher costs. And who is going to fight this inflation? The Federal Reserve. This is where the conflict gets truly dangerous. Jerome Powell and the Fed have one main tool to fight inflation: raising interest rates. If Trump's policies ignite a new wave of inflation, the Fed will be forced to keep interest rates high or maybe even raise them higher. Mortgage rates could go back to 8, 9, maybe 10%. But Trump hates high interest rates. He is a real estate developer. He loves cheap money. He has openly said he believes the president should have a say in interest rate policy. Imagine a scenario where inflation is running hot because of tariffs and labor shortages, but the president is bullying the central bank to lower interest rates because he wants the stock market to go up before the midterms. If the Fed caves to that pressure, if they lower rates while inflation is high, we turn into Turkey. We turn into Argentina. We devalue the dollar to a point of no return. The independence of the Federal Reserve is the only thing standing between the dollar and a banana republic currency, and Trump has made it clear he views that independence as an inconvenience. Then there is the debt. The national debt is currently sitting at $35 trillion. It is a number so big the human brain cannot actually comprehend it. Under the Biden administration, it has grown. Under the Trump administration, it grew. Both parties are drunk on spending, but Trump's new proposals are particularly budget busting. He wants to extend the 2017 tax cuts, which is expensive. He wants to eliminate taxes on tips, which sounds great for waiters but blows another hole in the budget. He wants to lower the corporate tax rate again.
The Committee for a Responsible Federal Budget estimates that extending the Trump tax cuts would add another $4 to $5 trillion to the debt over the next decade.
And here is the kicker. In 2016, when Trump ran, he promised to eliminate the national debt in 8 years. Instead, he added $8 trillion in 4 years. Now, he isn't even pretending to care about the debt. He is running on a platform of spend more, tax less, and let the next guy figure it out. So what happens when you have a government that spends trillions more than it takes in, while simultaneously igniting inflation? Bond investors, the people who lend money to America, start to get nervous. They start demanding higher interest rates to hold our debt. This creates a debt spiral. We have to borrow more money just to pay the interest on the money we already borrowed. It crowds out everything else. It crowds out infrastructure. It crowds out education. It crowds out the military. Eventually, the only way out is for the Federal Reserve to print money to buy the debt. And that, my friends, is the end game for the purchasing power of your dollar. This brings us to the question everyone asks. If the dollar is being attacked from all sides by tariffs, by debt, by political pressure on the Fed, where do you hide? This is why we are seeing such a relentless bid for gold and silver. It is not because people like shiny rocks. It is because gold is the only asset that is not a liability of a chaotic government. When you look at gold hitting record highs, you are not looking at gold getting more expensive. You are looking at the dollar getting weaker. The market is sniffing out the future. The market sees that whether it is Biden or Trump, the debt is going up. But with Trump, there is an added layer of volatility. There is the trade war risk. There is the Fed independence risk. Central banks around the world are buying gold at a record pace. China is dumping U.S. treasuries and buying gold. Why? Because they know that in a world of tariffs and sanctions, the dollar is a weapon, and they want to de-risk. If you are an average American investor, you have to look at what the central banks are doing. not what the politicians are saying. They are hedging against the devaluation of fiat currency. Silver is an even more interesting story in a Trump economy. Trump wants to rebuild American industry. He wants to manufacture solar panels and electronics here. Silver is an industrial metal. It is critical for the green energy transition, for electronics, for medical devices. If there is a push for domestic manufacturing, demand for silver goes up. But if inflation also goes up, the monetary demand for silver goes up. It is a dual-engine rocket. However, we must be objective. Trump's deregulation agenda could actually be good for the mining industry. It might become easier to open new mines in Nevada or Arizona if environmental regulations are slashed. That could increase the supply of gold and silver, which might dampen prices slightly in the short term. But the macro forces, the inflation and the debt, are much, much stronger than the supply side. We also have to talk about the geopolitical angle. Trump has threatened to pull out of NATO. He has threatened to withdraw support from Ukraine. He views alliances as transactional business deals. If the world perceives that the American security umbrella is folding up, that creates global instability. Capital hates instability. When fear rises, capital flees to safety. Historically, that meant U.S. treasuries. But if the U.S. is the source of the instability, capital might skip the treasuries and go straight to gold. There is a psychological component to Trumponomics as well. It relies heavily on confidence. Trump believes that if he cheers loud enough, the economy will grow. And to be fair, animal spirits are a real thing in economics. If business owners believe Trump will cut their regulations, they might invest more, hire more, and build more. That is the bull case. The bull case is that deregulation unleashes enough growth to offset the damage from tariffs and debt. It is the supply side theory. Grow your way out of the problem. But we tried that in 2017. We got a sugar high, but we didn't get the sustained boom that paid for the tax cuts. And now the starting conditions are much worse. In 2017, inflation was low and debt was lower. In 2026, inflation will be sticky and debt will be critical. You cannot run the same playbook in a different economic environment and expect the same result. It is like trying to drive a race car on an icy road the same way you drove it on dry asphalt. You are going to crash. But there is a massive gaping hole in the Trumponomics theory that we haven't talked about yet. It is the arrogance of assuming the rest of the world will just sit there and take it. Trump seems to operate on the belief that if he slaps a 60% tariff on China or a 10% tariff on Europe, those foreign leaders will simply bow their heads, cry a little bit, and write a check to the U.S. Treasury. He thinks they will accept their punishment like naughty school children. That is not how geopolitics works. That is not how pride works. And that is certainly not how survival works. Newton's third law applies to economics just as much as it applies to physics. For every action, there is an equal and opposite reaction. If Trump declares an economic war, the world will not wave a white flag. They will fire back. But, and this is the critical part, they won't fight fair. They won't fight a traditional tariff for tariff war because they know they can't win a spending contest with the American consumer. Instead, they will fight an asymmetric war. They will hit us where we are weak, not where we are strong. Let's look at China. If Trump hits them with a 60% tariff, Beijing's not going to respond by just taxing American soybeans again. That was the playbook in 2018. The 2026 playbook will be much nastier. China controls the choke points of the 21st century economy. You want to build electric vehicles, you need graphite. China refines 90% of the world's graphite. You want to build advanced missiles and fighter jets, you need rare earth elements. China dominates that supply chain. You want to build solar panels to power your grid? Guess who makes the wafers? China's retaliation won't be a tax, it will be an embargo. They could simply turn off the tap on critical minerals. Imagine the chaos if Ford, Tesla, and General Motors suddenly can't get the batteries they need. Imagine the panic if Lockheed Martin can't source the components for national defense systems. That is leverage. That is how you fight back. They don't need to sell us t-shirts. They can starve our high-tech industries. It is strategic suffocation. And then there is Europe. Our friends across the Atlantic. During the first Trump term, they were caught off guard. They were disorganized. Not anymore. The European Union has spent the last 4 years building a legal weapon they literally call the anti-coercion instrument. It is a loaded gun sitting on the table in Brussels, waiting for a trigger. If Trump hits German cars or French wine with a universal tariff, the EU will target the most politically sensitive industries in the United States. They are smart. They map out the swing states. They will target bourbon from Kentucky to hurt Mitch McConnell's base. They will target motorcycles from Wisconsin. They will target citrus from Florida. They will design their retaliation to inflict maximum political pain on the Republican Party specifically. It is not just economics. It is election interference by other means. They will try to make the tariff so painful for the American voter that Trump is forced to back down. But the most dangerous reaction isn't the open conflict. It is the quiet exit. It is the silent quitting of the US dollar. We have already weaponized the dollar against Russia. Now, if we weaponize access to the American market against everyone else, the rest of the world is going to accelerate their plans to abandon the dollar. We are already seeing it with the BRICS alliance: Brazil, Russia, India, China, South Africa, and their new members. They are actively building a parallel financial system. They are trading in yuan, in rupees, in gold. If Trump makes it too expensive to sell to America, they will simply stop trying to sell to America. They will trade with each other. A global tariff wall doesn't isolate the world from America. It isolates America from the world. We risk becoming an economic island. Sure, we have a big market, but we don't have everything. We import coffee. We import bananas. We import computer chips. We import the raw materials that keep our standard of living high. If the world decides to friendshore away from the United States, we are left holding a lot of worthless paper dollars that nobody wants. That is the ultimate inflationary nightmare. When those dollars come flooding back home because nobody abroad needs them to buy oil or trade goods, the value of your savings collapses. And don't forget the whack-a-mole game. Trump thinks he can block Chinese goods. So what happens? Chinese companies move their final assembly to Mexico. They move it to Vietnam. They stamp "Made in Mexico" on the box and truck it across the border duty-free. It is called transshipment. Unless Trump wants to start a trade war with Mexico and violate the USMCA treaty he signed himself, he cannot stop it. The goods will still come in. The supply chain will just get longer, less efficient, and more expensive. And who pays for that inefficiency? You do. So when you hear the promise of make America wealthy, again through tariffs, ask yourself, is the rest of the world just an NPC, non-player character in a video game? Do they have no agency? Do they have no pride? Or are they real nations with real economies and real weapons of their own? History tells us that trade wars have no winners, only survivors. And usually the country that starts the war ends up isolating itself. The Smoot-Hawley tariffs in the 1930s didn't save the American economy. They deepened the Great Depression. We are flirting with the same disaster, driven by the same hubris, expecting a different result. The world will not submit. They will innovate around us. They will retaliate against us. And they will wait for us to realize that we need them just as much as they need us. But by the time we realize that, the prices at your local Walmart will have already doubled. Let's go back to the average American family, the family that is sitting at the kitchen table trying to figure out how to pay for groceries and gas. How does a Trump presidency actually affect them? If the tariffs go through, their weekly grocery bill goes up. Their Christmas shopping gets more expensive. Their new car gets more expensive. If the deportation plan goes through, the cost of services goes up. Home repairs, landscaping, childcare, anything that relies on immigrant labor becomes a luxury good. If the tax cuts go through, they might see a slightly bigger paycheck, but that extra money will be eaten up immediately by the higher cost of living. And if they have credit card debt, despite Trump's promise of a 10% cap, they will likely find that their credit limit gets cut, or their card gets canceled, or the rewards points disappear. It creates a scenario where the headline numbers might look good. The stock market might hit new highs because corporations love tax cuts, but the real feel economy for the working class gets harder. This is the bifurcation of the American economy. The asset owners, the people who own stocks and real estate, might do fine because inflation pumps up asset prices. But the wage earners, the people who live paycheck to paycheck, get crushed because wages never keep up with the cost of living in an inflationary spiral. It is crucial to understand that Trump is not a fiscal conservative. He is a populist. He is not interested in balancing the budget. He is interested in being popular. Giving away tax cuts is popular. Protecting industries with tariffs is popular. Handing out cheap money is popular. But someone has to pay the bill. And in economics, there is no such thing as a free lunch. The bill is paid through the erosion of your savings. When you look at the 2024 and 2026 landscape, you have to separate the man from the math. You might love his attitude. You might hate the woke culture he fights against. You might love the idea of America first. Those are valid political feelings. But your portfolio does not have feelings. Your bank account does not care about culture wars. If you are betting on a Trump victory, you are betting on volatility. You are betting on a massive shakeup of the global trade order. You are betting on a conflict between the fiscal authority, the president, and the monetary authority, the Fed. In that kind of environment, holding cash is risky. Holding long-term bonds is risky. This is why diversification is not just a buzzword, it is a survival strategy. You need assets that can swim in inflationary waters. You need assets that don't depend on a politician keeping a promise. Because let's be honest, politicians break promises. Trump promised to build a wall and have Mexico pay for it. We got a partial fence, and the American taxpayer paid for it. He is promising a 10% credit card cap. You will likely get a banking lobby victory and zero relief. The danger of AI spam content and low-quality news is that it tells you what you want to hear. It tells you Trump will save the economy or Trump will destroy the world. The truth is always in the boring gray middle. Trump will likely stimulate some sectors and suffocate others. He will enrich some groups and impoverish others. But the trend line is clear. The era of big government spending is here to stay regardless of who wins. The era of protectionism is here to stay. Globalization is dying. We are moving into a world of economic fortresses. In a world of fortresses, you want to own the stones, not the paper IOUs of the king. So as we watch this political theater unfold, as we watch the rallies and the debates and the endless stream of promises, I want you to protect yourself. Do not base your financial future on the idea that a politician is coming to save you. No one is coming to save you. The cavalry is not coming. The banks are looking out for their shareholders. The politicians are looking out for their donors and their poll numbers. The Federal Reserve is looking out for the banking system. Who is looking out for you? Only you. This means you have to be smarter. You have to understand that a tariff is a tax on you. You have to understand that a tax cut funded by debt is just delayed inflation. You have to understand that when they devalue the currency to help exporters, they are shrinking the value of the hours you worked yesterday. We are living through a profound shift in the American experiment. We are testing the limits of how much debt a superpower can hold before it breaks. We are testing the limits of how much we can manipulate the free market before it snaps back. Trump is not the cause of all these problems, but he is an accelerant. He is pouring gasoline on a fire that has been burning for decades. My advice, look at your own balance sheet. Pay down your variable rate debt because interest rates might stay higher for longer than you think. Don't rely on a credit card cap. That might never happen. Secure your income streams and seriously consider having an insurance policy outside of the dollar system, whether that is gold, silver, land, or a business you control. Because at the end of the day, the most rebellious thing you can do, the most America first thing you can do is to be financially independent of the system that is trying to inflate you into poverty. They want you dependent. They want you waiting for a handout, a cap, a subsidy. Don't give them the satisfaction. The noise is going to get louder. The promises are going to get bigger. The sharks and the batteries and the Hannibal Lecters are going to keep coming. Laugh at the jokes. Enjoy the show if you must, but keep your hand on your wallet. Because when the curtain falls and the applause dies down, you are the one who has to pay the price of admission. And in the coming economy, that price is going up. Stay skeptical, stay prepared, and remember that in the casino of politics, the house always wins unless you refuse to play their game and build your own house instead. That is true freedom. That is the only policy that matters.